Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So feel free to raise your questions or concerns on the live comment section. And of course, if you have any relevant question relating to the presentation, those questions are very welcome in the live comment section. So before I proceed, I would like to do a mic test. So if you can hear me clearly, kindly type hi on the comment section, and these will confirm that everything is working just fine. So for those who are new to the session, you should know that this basically happens every day at 11 a.m. Monday to Friday. We cover what's currently happening in the markets. We try to understand the major news affecting the markets for that particular day. We also try to understand the key price levels in various charts. And once we go through this, then hopefully you're able to trade from an informed perspective. So this is purely educational. It's not financial advice. Neither is it a recommendation to trade. So always do your own due diligence, do your own research analysis, as well as practice proper risk management. So hello, Joseph. Hello, Rosalind. Jetty Agencies, Luca, Paul, can see Humphrey, Samuel, and thank you guys for joining the session. Let's get on with it. So the very first chart that you're seeing here is the chart of the US Tech 100 or the NASDAQ 100 index. It's making an impressive drop after making a rally yesterday towards the upper trend line, eventually finding resistance around this area, and now it's pushing back downwards. And now with the news we are having in the markets, there's that potential that we could be seeing the NASDAQ going back downwards. So remember, I already shared this yesterday, that the market has already broken this particular trend line, which was holding on quite well since March. But then after breaking that particular trend line, you can see the swings are clearly indicating that the market is forming lower highs, as well as lower lows, indicating continued momentum downwards. So besides this, let's do what we have always done in these sessions. First, we look at the economic calendar. So yesterday was a largely quiet day. We didn't have much news in the markets. So news beginning to stream in today. So we saw the preliminary GDP quarter-over-quarter for Japan coming in at 1.5%. And this was a much higher growth than expected. The expectation was 0.8, and the previous reading was 0.7. So this is good for the Japanese economy. Then we had the monetary policy meeting minutes from Australia. Later on, we had the wage price index from Australia, which came in at 0.8%. Compared to the previous reading, it's the same, but slightly lower than the expectation of 0.9%. Then industrial production data in China, which was a massive news in the markets. So it came in at 3.7%, meaning that industrial production is really slowing down. This is lower than the projected 4.3% and lower than the previous reading of 4.4%. So retail sales in China also slowed to 2.5%. From a previous reading of 3.1 and an expectation of 4.2%. Fixed asset investments 3.4% compared to 3.8% expected in previous. So it was a list or a sequence of negative news coming in from China. And as a result of this, the People's Bank of China was forced to react to the weakness in the economic recovery. And the reaction that we saw this morning is the People's Bank of China going for another rate cut, by far the highest since they started cutting rates earlier this year. So China's central bank unexpectedly reduced a key interest rate by the most since 2020 to bolster an economy that's facing fresh risks from a worsening property slump and weak consumer spending. So the property problem is continuing this year in China, and things are getting bad, are moving from bad to worse, especially for the top real estate company that missed a bond payment earlier this month. And this is becoming a problem, and it's leading to a big sell-off in the real estate sector in China. So People's Bank of China lowered the rate on its one-year loans or medium-term lending facility by 15 basis points to 2.5% on Tuesday, the second reduction since June. But one of the 15 analysts surveyed by Bloomberg had predicted the rate would stay unchanged. A short-term policy rate was also cut by 10 basis points. So this means that China is basically cutting interest rates quite rapidly towards zero. And this is designed to stimulate the economy, to ensure there is excess money flowing within the Chinese economy, and this would stimulate production. So China is suffering from two main things. Demand has really gone down domestically. So it's not a lot of people in China who are buying products the same way they were buying before COVID. And of course, external demand due to the inflation and the high cost of living we're experiencing, then the world is buying less goods from China. However, since the Chinese currency has been devaluing, then it has made Chinese goods significantly cheaper. And this is basically quite positive for China. So in the short run, we should be expecting to see a higher inflation rate in China, as well as a higher level of production. So besides this, going forward for the rest of the day, we also saw UK jobs data coming in softer than expected. So the claimant count change, this is the number of people claiming for the first time for unemployment insurance, was higher at 29.0 thousand. This basically means that there's more people claiming for unemployment insurance, way higher than expected and higher than the previous reading. Average earnings index is now a big problem for the Fed at 8.2%. This is a 2-year high, basically meaning that wage growth is much higher than anyone could have anticipated. So with a strong wage growth, it means that people who are currently employed are getting more cash, or employers are paying a higher amount of money to retain talent. And as a result of these, we are seeing a very strong consumer in the UK, which is quite negative for inflation. But for claimant count change, it's consistent with what the Bank of England is looking to achieve. Average earnings index is inconsistent, but the unemployment rate is rising, which is consistent with what the Bank of England is looking to achieve. So the Bank of England wants a higher unemployment level, a higher number of people claiming for unemployment insurance, and they want earnings to basically slow down, not to move up higher. So this has triggered quite an amount of volatility in the market. We'll be looking at this later on in the presentation. But then there's also other data that we'll be expecting for the day. So we know that there's a French bank holiday and an Italian bank holiday today. So we'll be seeing the German ZEW economic sentiment report at 12 p.m. Then we'll be looking at the consumer price index from Canada at 3:30 p.m. This could be interesting. There is a high likelihood to what we saw in the US. So the previous reading, inflation was 5.1%. We expect this to drop to 5.0% in Canada. So a difference to the upper side would be very interesting in trading Canadian dollar pairs. Of course, we know that if inflation spikes higher, then the Bank of Canada may have to tighten policy further, which would be positive for the Canadian dollar. But if inflation is consistent and keeps going down, then the Bank of Canada may choose to level rates, and this would be negative for the Canadian dollar. So most important news for the day will be the core retail sales. This will be happening at 3:30 p.m., affecting the US. So in the previous reading, it was 0.2. We expect this to rise by 0.4%. The retail sales will be expected to double the rate of growth from 0.2% to 0.4%. So this will be very important. And of course, we'll be looking at some earnings in the retail sales sector. So we will be expecting earnings from Home Depot. And as the week continues, we'll be looking at earnings from Walmart as well as Target Corporation. So once we go through this, I think the only remaining data point that will be very important will be a speech from FOMC member Neil Kashkari. This will be happening at 6 p.m. So he is due to participate in a moderated discussion at the API Group Controllers Conference via satellite. audience questions expected. So we have seen various previous meetings by Neil Kashkari, and they have caused some form of volatility in the markets. So I wouldn't ignore this one either. So that being mentioned, let's look at the charts and try to understand what we will be expecting for the day. So I'll begin with the NASDAQ. As I already mentioned, this channel seems to be playing out quite nicely. So we'll be expecting the market to continue dropping towards yesterday's high. So for US 30, you can see the sharp drop already happened, and it's almost getting to the support level. So I think the support level is not very far off for the Dow. So if I was to map the previous lows for the last 2 weeks, you can all see that they are aligned somewhere around this area. So the market is too close to the target compared to the US Tech 100, where there's more room for downside. So for US 500, the big sell-off has already happened, but then there's still some room for more downside. So perhaps this area, which was acting as the low yesterday and the low the previous day, could be a nice target. European indices also facing a big sell-off after the wage growth happened in the UK. So here we are seeing the French 40 index making a big sell-off. Of course, we know that there is a recent lows here that happened last week. So the low of last week and the other week seems to be working nicely as pretty awesome targets for anyone trading the France 40 index. The Euro 50 also doing something similar. So perhaps targeting 42.75 might be in order. So from the 4-hour chart, this is how it's looking. And of course, for the UK 100, it's also on a big sell-off after moving towards the upper trend line. So from the 1-hour chart, I think this has seen the biggest sell-off, especially after seeing the jobs data coming in from the UK. So as for the dollar index, yesterday, when we were doing the session, the dollar index was pretty weak. We had this red candlestick here, but then later on, it happened to be strengthening before weakening later and then closing the day on a high. So today, we will be looking to see if the dollar index continues being volatile like yesterday. So today, in early morning trading, we didn't have much volatility, but I expect the dollar will start weakening at some point. This continued strong momentum upside may not hold for longer. And with that in mind, there's a good chance we'll be seeing some form of a pullback in the dollar index. However, if the dollar index continues towards the upper trend line, basically indicating that there's more upside momentum, then it basically means we should be seeing the pound USD moving further back downwards. However, from the price action of yesterday, even if you look at the daily chart, there was a big tail on this particular candlestick towards the lower side, indicating a rejection of lower prices. So there's a high likelihood we will be seeing the pound continuing to gain against the US dollar. So from the 4-hour chart, you can see the big green candlestick with a long tail towards the lower side, indicating a rejection of lower prices. And now the prices may be headed much higher towards 1.27349. And if we breach that level, then a target of 1.27868. So it's a similar story for the Euro USD, a very strong rejection on the 4-hour happened yesterday. We can all see the green candlestick with a long tail towards the lower side. So indicates a rejection of lower prices, and now the market may be due for a nice rally towards 1.09647. So from the 1-hour chart, you can already see that momentum is entering the markets during the London session, and we could be seeing some further upside. So we just started the London session, and we could be seeing some further upside in the euro gaining against the US dollar. So as for USD JPY, looks like a basket case to me, especially after the market was unable to make a pullback here after hitting this resistance. And now this other area is in tight. And this is a level that we last saw all the way back in October last year of 151.9. So the Bank of Japan is currently overstretched, and it keeps on buying bonds from the open markets, which has the effect of weakening the currency. And in this case, I expect that the yen will continue weakening to the dollar. So some further upside is expected. So any form of pullback might represent a trading opportunity. So whenever you have such a strong trend in a market, sometimes you might want to use smaller time frames to monitor some of these consolidations. So for instance, you can see here the market was unable to cross this area for a while between yesterday and today. And this seemed to be the lows, and eventually there was a break. So just by mapping this area, you should have easily identified the break here and then gone for a buy trade immediately after the break. So I don't think it's too late to go for one, but it could be quite late, but then there's still some good chance you'll be seeing some upside in USD JPY. So the only risk to be concerned about is either some form of profit taking or the Bank of Japan intervening in the currency market. So as for USD trading against the Canadian dollar, we already tested the previous high. So after forming this pattern, and I'll show you this, I remember mapping this. So the market forms a triangle, breaks to the upper side, and now the target becomes the top of the triangle. The market eventually rallies and gets to the top of the triangle. And now what we are seeing is a big test incoming. The market could either break or bounce off this area. So knowing that we are expecting inflation data from Canada in the afternoon, then there's a good chance that this price level will be the pivot for the day. So if we trade above it, then it basically means a weaker Canadian dollar, strong US dollar. And then if we trade below it, then we should be determining that as the direction of the markets today. So the key pivot will be the 1.35 price level. So I'll be observing that price level towards the news at 3:30 p.m. And if there's a direction, then I will be considering that as the direction for the day. For gold, this is what we are seeing, persistent movement downwards. So yesterday, after the market attempted to move higher, where we have the yellow area, I expected to see some further upside, did not happen. There was a big sell-off where the dollar index was pretty strong in the market, and then a very strong bounce. And now we are seeing yet another test here. So clearly, it's a market that is consistently or persistently moving back downwards. But then any attempts to go up is met by a very strong selling pressure. And now it changes the entire pattern from what we were looking at as a channel. And now what we are seeing is a market that is basically forming a wedge. So a wedge is where you have two trend lines facing the same direction. So in this case, the wedge is two trend lines that are basically bearish. But then the difference becomes that the two trend lines are approaching each other. So at some point, there will be a choking point and the market will have to break. So the break could happen to the lower side, but the opportunity is often better if the break happens to the upper side. So in this case, I'll just monitor the two trend lines, this lower trend line here, and this upper trend line here, mapping the last 4 days. And then from here, I would be looking for potential for a break towards the upper side. So it hasn't happened yet, but if it happens, then it could present a very nice trading opportunity. So just observe to see if there's evidence of bullish entry. And if this happens, then you'll know when to go for your position. So AUD USD making a jump yesterday, pulling back, making another jump, another time, another jump, and now this seems like the fourth time. So if this continues, then it basically means that the market is basically moving sideways. So what we are seeing here, which is quite evident, is that the market seems basically been moving sideways with this. If I'm trading very short-term intraday trades, but for anyone who's trading long-term, then you might want the market to get off that range. So remember, it's a major support area here. So you want to see some good evidence of a buy before going in. So for now, it's just sideways momentum. So just remain patient and wait. So as for UK oil, we have successfully dropped back down towards the lower trend line. So I remember projecting this last week, and now it took some time for a number of days. Eventually, we have gotten to the lower trend line, and now this is the area where we look for bullish entry. So if you see signs of bullish entry, this is the area to go for a buy trade. And if there's a break, then you start looking for a short selling trade. So the market is at a critical point where you're looking to make a market entry. So let's see the questions that you guys have raised. I see there's quite a number. Seeing one from J Squad, economics 1-on-1. How do you transition an economy from a debt-driven expansion mode to a consumer-driven with less use of quantitative measures such as cutting rates, which has negative net effects to cash? So for this one, if it's a debt-driven expansion mode to you're trying to make this into a consumer-driven economy, then all you have to do is to make sure there's more money in the consumer's pocket. And I think the way we are seeing it happening with the US is basically the government expanding its deficit spending. So on one side, it becomes really expensive. So it's a tricky endeavor because at some point, you still have to pay debts. So on the other hand, you might want to consider the fiscal angle where you either give subsidies or basically cut taxes, which would basically allow more capital within the economy. Do you think the dollar is strengthening because of better than expected PPI and a little bit higher inflation? And do you expect it to get stronger? Yes, the higher inflation number was quite a problem. The higher GDP number was also quite a problem. And of course, for the jobs report, the wage growth was also a key concern. So those three factors are increasing bets that the Fed could go for another rate hike. So meaning that these factors are basically supporting a strong dollar. So China has cut its earning rates. Why was it necessary? They want to stimulate growth. They want to get at the same path of recovery they were 6 months ago. It's not happening. And now youth unemployment is becoming a problem. So in order to face that out, they need to stimulate the economy. And the easiest way for a net exporter is to cut interest rates so that people can be incentivized to borrow more from the commercial banks, invest in their businesses, stimulate production and exports, which would create more jobs. So that's the basic rationale for China. What's your take on Michael Burry shorting the stock market? Yes, yesterday there was a trending post, especially on Twitter, about Michael Burry entering a $1.4 billion position, shorting both the Nasdaq and S&P 500. The thing is, he's not basically exposing 90% of his net worth into these short selling positions. So he's basically entering leverage positions. So the reporting is biased. So I would say, let's say you go for a one lot buy in Euro USD. So when you go for a one lot buy in Euro USD, you're basically buying 100,000 euros. So if you go for 10 lot buy in Euro USD, people might report that you've bought 10 million euros, but that's far from the truth. So when you're reporting on leverage positions, sometimes it can get over exaggerated. So it would have been easier to report the amount that he has staked in those positions, which is significantly lower than the amount being reported. On the other hand, he's a guy who has been right quite a number of times in the markets, especially by calling the big short in 2007 to 2008. So the fact that he's going short on these equity indices basically means that there's something worth considering. And of course, I already showed you this chart for US Tech 100, where on the 4-hour chart, we saw the market has already broken towards the lower side. So this is a trend line that has not been broken for a long time, I think from December last year. And now we are seeing the market actively breaking this trend line. So this basically implies that the market could be headed back downwards. And this might be the time for any profit holders to take profit. So after the gold bearish run yesterday, will the 1900 level hold, or we are going straight headed to 1899? So personally, I haven't been this much bearish in gold. I expect some form of inversion, especially when the stocks start selling big. So when you see a big sell-off happening in stocks, people will look for safety, and that might mean some form of demand for gold. So in this case, even though we have seen these extremely low prices, Also, remember, within this year, we have also seen an all-time high for gold. So if you go to the daily chart, then you notice that this is an all-time high for gold. I think we saw prices trading around here, 2084, 85. So the fact that we are seeing this big sell-off happening right now, it doesn't imply that automatically gold will keep going down. The more an asset trades downwards, the cheaper it becomes, the more attractive it becomes to investors. So in this case, even if there's this sell-off, the opportunity is towards the upper side. So where you might keep on squeezing some positions, every time gold moves to the upper side, you go for a short selling position. For now, I'm very biased. I'm very cautious about continuing to short at this level, which you can see was a major support sometime back, 1902. So the potential for the market bouncing off this area is significantly higher, and you can already see indications of buyers coming in the market. This was an indication. The 4-hour candlestick with a long tail towards the lower side and a small body, which is basically a hammer. And in this case, there could be signs that bullish are coming into this market. So just be patient and be prepared. I'm a newbie to Forex. So if you're a newbie, kindly go to FX Pesa channel. That is on YouTube. Look for a particular playlist called Novice to Pro and go through the 10 episodes. They will help you transition from a complete beginner, and you'll understand most of this content that we present every day at 11 a.m. Is it in order to trade by pound USD in the context of the economy of Britain is quite resilient, brushing off the long-term bearish trend it is in relatively? Could we stand put until the release? For me, I would be patient with it. As I've been saying, I'm very bullish on pound USD, but I want to be patient until this is resolved. So for last week, half of the previous week, and this week, this is more of a sideways momentum. There's no clear direction as per now. But then if you zoom out, you know that long term, this is serving to be quite a roller coaster, since we are looking at a major support level, and there's a good chance that the market will bounce off this area. So we have really struggled to bounce from this area. So just be patient, look for more evidence of bullish entry before you making your market entry. What trading platform is that? This is the MetaTrader 5 trading application with FX Pesa. So there's a request check on gold. It's saying there's a wedge. Yes, the wedge is here. It's I've already highlighted it here. It's huge. The wedge started on the 10th of August, and the market has been trading inside this wedge for a while. And now, if you say a smaller time frame, it's still a wedge, a wedge within a wedge, basically showing that there is some form of consolidation. The market is basically losing momentum, which basically prepares you for some incoming momentum. So the wedge is taking this pattern. I want you to view it from a market perspective that starts all the way back here and keeps going down. And if I zoom here, let's see if I can do this. Yes. Then this is where the market is trading along. So gold is just participating within this wedge, and at some point you'll be looking for a break, and you just have to be patient and wait for the break. What are the trading sessions time in Uganda? I think there's a live trading session on Baby Pips. We share the same timeline with Uganda, so it will be the same. So just go to babypips.com, click on tools, and then Forex market hours. So this is what we have. We are just closing. Don't know what's happening here. I think it's the ad. Yes, so we're just closing the Tokyo session. We already started the London session, and now we'll be headed into the New York session. So it's a live tracker. Depending on where you are, it will show you the time zone and the market session that you're participating in. So there goes the link. So thank you very much, guys, and I hope to see you on the next session. Yes, China is facing deflation. Basically, there was overproduction in China, betting on a strong recovery. And now companies have goods filling their warehouses and they want to clear those goods. So what they are doing is cutting prices in order to sell more. And also we even saw a price war happening between Tesla and BYD, where they are all cutting the prices of their electric vehicles to make sure that inventory is moving. So as a result of that, we keep on seeing prices going down in China, leading to what we are calling deflation. And at some point, we'll be expecting to see China exporting this deflation to other countries. So the request is to check on USD JPY for the pullback. I don't think one hour candlestick is enough to warrant a pullback. So you just have to be patient. Even if it's just one candlestick going back downwards, just be patient and wait for it to drag along. So you want to see a market transition from high momentum to low momentum, which is often indicated either using a consolidation, where the market is moving sideways for a while, and then you'll know when to go for the break. Or sometimes it's just a retest. You want to see the evidence of the market going back, retesting, and then buyers coming in. Once you see the evidence from your charts, then it may make sense to go for an entry position. So that's it for the day. And I hope to see you guys on the next session. Remember, today is a beautiful day. We will be having another session at 4 p.m. It's the same time for the guys in Kampala, same time for guys in Nairobi. If you're not within those two time zones, within that one same time zone, then you should know that it should be 4 p.m. East African time when we'll be having the next session, focusing on the US Open. So thank you very much, guys. I hope you have a fruitful day.